with our experts on the show today. We have been joined by Sandip Sabharwal as well as Naresh and Kunal are also with us. Very good afternoon, gentlemen, and thank you so much for your time. Sandip, first up, help us with your take on the pharma names, because the earnings so far, there hasn't been any major downgrade as per se for all these major pharma companies, and even when we dig deeper, the mid and small cap in the pharma name are doing pretty well in terms of the earnings. Help us with your take on the pharma space, and how are you spotting new opportunities there?
Pharma sector has been doing well for the last few quarters, and this quarter results are also similar. Most of the companies which are larger in size, Cipla, Lupin, Sun Pharma, etc., I think all of them outperformed expectations. Smaller companies like some companies like Divi's and all also did very well. Very small companies I don't track in pharma, but overall the sector has done well. The only risk at this point of time is, uh, could there be any risk for these companies due to the reciprocal tariffs which President Trump is talking of, which I think we'll know today, because I think today is the day when those are to be announced. So depending on how that go, if there is nothing significant in that, then I think the pharma sector outperformance could continue.
The biggest shocker has been Natco Pharma numbers, and I don't think the analyst fraternity really saw this coming. The fact that the revenue has seen a downtick of nearly 37.5%, net profit is slid about almost 38 odd percent or so, and the margins as well have seen quite a bit of squeeze, and that's why that stark underperformance, almost a 20% knockdown, is what the stock is seeing. But Kunal, what about the volatility today? Just when we thought it's going to turn out to be a green day, that uptick got sold into.
I think just short-lived maybe the rally for the indices, but then there's no major damage on the stocks, at least in terms of yesterday's selling which have happened. There have been good follow-through moves for many large cap names. What you've seen today, for example, the Bajaj twins, they've done reasonably well. Then you've seen individual stocks from financials, the private sector banking names like Kotak Bank, etc. They've gone through a decent upside for themselves. And the good part is that the markets are still holding on to the previous day's low of 22,800 mark. Yes, we're still trading just close to that 23,000 levels. But I think till the time we trade about 22,800 mark, there could be an indication that maybe the volatility may continue for some more time, but the markets may gradually stabilize.
Let's hope that we just don't retest that 22,800 mark, which we have retested like around 2 times in the recent past. So let's wait by. But yes, Nifty 50 is getting closer to that 23,000 mark as well. But talking about today, yes, pharma is showing strength, but other than that, it's Bajaj twins that are doing pretty well. And Naresh, if you can help us with your take on that, because you have been tracking these large cap names and specifically these two. What are the levels that one should be looking out for? And given the small bit of a retracement from those high levels on an intraday basis as well, do you believe that it's a compelling opportunity to go ahead and buy the dips?
Late at these levels of say 8,300 all the way down to 7,800, 8,000 for a longer term view, because that is where it broke out from. 3 years, the return has been zero. 2021, it topped out at 8,000. So that could keep getting retested with the markets, but I would expect it to hold about 7,500 and slowly and steadily head up toward 10,000 odd levels going forward. So this is a good way to accumulate, and it is a low beta stock now. And even in the last 3 years, when it was lower return, the stock did not see huge drawdowns. It's been more sideways relative to the market as such. So overall, structural breakout, slow and steady up move should continue from here on with the markets.
That on Bajaj twins, and like we've been flagging off, Bajaj Finance, of course, has done very well in the last 3 months. But Sandeep, within the entire financial pack, and I'm going to include banks here, banks looking cheap. Now you've got positive news flow on even names like a Kotak, for instance, wherein the RBI has lifted the restriction on credit card issuance. Where do you think there are opportunities to buy afresh right now?
Smaller banks are facing asset quality issues, and tight liquidity always impacts the smaller banks much more. I think we need to focus on large banks. Many banks have consolidated for a long time. I think Kotak Bank, like you said, restrictions got removed. It should continue to do well. ICICI looks good. Axis Bank after the correction on valuation looks good. I think even HDFC Bank will do well. So I think the entire large cap banking space and good quality NBFC should do well. So I think NBFCs will start doing better once the system liquidity actually possibly goes into surplus. So which is something we need to watch how RBI handles that and whether they take measures to uh, improve system liquidity further.
Bajaj Finance be your top pick there or any other name?
So Bajaj Finance has already rallied significantly. So I would think that among the NBFCs like L&T Finance, M&M Finance, I think they are much cheaper and have shown decent trends in asset quality and growth could pick up for them. Even the gold loan NBFCs could do well. And because of the sheer rise in gold prices, even if the volumes remain similar, we could see significant uptick in the value of their overall loan basket. And as the gold prices move up, the risk of NPAs also reduces because gold prices have been continuously rising, and as such, the risk in the book keeps on reducing. So I think, and these stocks are relatively cheap also.
Yeah, Muthoot has shot up about almost 6% today. It's very good gains coming in. Kunal, on the charts out of these four names, Manappuram, Muthoot, L&T Finance, M&M Finance, what's looking like the strongest?
Yeah, so the strongest one, of course, is Muthoot Finance. The stock perched at a fresh high, I think around the 2,300 mark plus where it's trading right now. So, and especially after today's gap up, which the stock has shown, indicates that we are now looking at a fresh range or a breakout for Muthoot Finance and, expecting the stock to move up higher towards 2350, 2400 kind of a level. So, we generally see a 4% to 5% shift of range for Muthoot Finance post the breakout whenever the stock has shown over the last many weeks, many months. From the other names like L&T Finance and M&M Finance is the most stronger chart because just recently, I think, last 1 week back or so, the stock had broken past above a series of major resistances as well as a consolidation. So 260, 250 as a support and 275 broadly as a resistance for M&M Finance. And the stock had managed to break past above the 275 plus levels on the back of higher volume. So that's a much more stronger chart.
All right, that's a take coming in on some of these financials. But Sandeep, I also wanted to have your take on these solar power related companies because some of these articles are now suggesting that all the policy actions taken by Trump till date, it might not hamper the energy transition that we have been witnessing in the US, and there's still room for growth for the Indian companies rather. And yes, they are getting good demands from the domestic market as well. Given the recent correction, Sandeep, do you believe it's good time to go ahead and maybe add some exposure in these solar power related companies?
I believe solar power related companies are the biggest value traps in the market today. The overcapacity that's getting built up in the entire system is extremely high. We've seen many projects, in fact, on the solar side, finding it tough to sign PPAs. So the number of projects without any PPAs signed have also moved up substantially. So I think it's a very, very risky sector at this point of time. Its valuations are way above any fair valuation. And I would think that this is one sector where investors should be very, very careful for the next 2, 3 years. I don't know when the entire cycle will go bust, but it will. Now, whether it takes 1 year, 2 years.
Nifty 50 is still in a bit of a recovery mode, but can't say much because we were still not able to hold on to those particular gains. But other than that, what's doing well is some of these metal counters because just today we had stocks like Tata Steel, JSW Steel, even Hindalco holding up well, and Hindalco will also be in focus on the back of its earnings as well. But Kunal, if you can help us with your take on the metal pack overall, that any particular stock that is standing out for you?
So JSW Steel is the strongest name from the metal pack. That stock has been trading above the longer term averages, and then above the 900 mark, which is the breakout point for JSW Steel, about a week or a couple of weeks back. Now that stock has also seen a good volume built up, and in fact, there was this trendline resistance for JSW Steel just around the 950 mark. Even that's been breached or broken by the stock. So that is now one of the stronger names in the metal pack. Then you have two other candidates which are also nearing their potential strong breakouts. One of them, of course, is Tata Steel, the stock which is coming back second time I think in the last 3 or 4 days above its 50-day moving average. And I think consistent attempt towards a breakout of a particular level eventually leads to the breakout as well as the start of a momentum. So that I believe could be a crucial zone for Tata Steel, and that could trigger a decent swift rally for the stock in the near term. SAIL could be the big surprise because that stock has been a huge underperformer, and over the last 2 or 3 weeks the stock has formed a bullish hammer pattern almost twice in the last 2 to 3 weeks for SAIL. The stock has established a strong support zone around the 105 mark and is now showing good volume traction over the last 2 days specifically. So I believe that could be another candidate of a positive breakout.
Just looking at some of the Adani names, they're definitely under pressure. Adani Ports down about 1.5%. Adani Enterprises down 4%. Technology is not holding out at all. HDFC Bank under pressure. There's Titan, L&T, iShares, ITC, ICICI Bank as well, a little bit soft. But yeah, Trent has made a comeback, and where's Reliance? Let's just bring up that intraday graph as well for you on your screens. Well, of course, Kotak is holding out well. Bajaj Finance has been doing well. But no, Reliance has been quite a struggle at that 1215 odd level. Sandeep, would you buy Reliance at these 1200 thereabout levels?
Yeah, Reliance continues to be a cheap stock in the entire large cap universe, despite strong results, which actually resulted in a 8-10% move post results. The stocks again corrected in line with the markets. So I think it's after many years I find Reliance to be in value zone. So I would think that investors who are patient enough, Reliance should do well.
The one thing, of course, is that it's cheap right now. But the other thing is, where is the trigger going to come in from to actually take it higher? When do you think some positive news flow will come by for Reliance?
When stocks become over expensive, then they don't need triggers to fall. And when they become cheap, they don't actually need triggers to move up. So I think a trigger could be another quarter of good results. Trigger could be some listing news. Trigger could be a reversal of foreign investor flows. There could be several things which could happen. Now, because foreign investors have been selling so much into emerging markets, there is an assumption this will continue. But I think several critical things are happening globally, which includes the dollar index seeming to peak out, the significant reduction in possibilities in geopolitical tensions with Middle East now being pretty settled. There is a potential settlement of the Russian-Ukrainian issue. So all of these things typically tend to be positive for emerging markets. So right now, people don't see if foreign investors will start buying into emerging markets again or when. But I think the parameters are being set for that flow reversal to happen. And let's see over the next few weeks what plays out.
All right, Sandeep, with this, we'll let you go on that. Thank you so much for taking the time out and speaking with us. But with this, viewers, let's also start taking some of the closing trade ideas from our experts. And Kunal, you go first. Tell us which is the stock that you are eyeing at right now.
So I'll go with the one UPL, United Phosphorus. That's a chart which has started to look attractive. The stock forming a base in the last few weeks, breakout of that 600, 610 mark, and then a retest towards the support line just around that 610 level still yesterday. So attractive bet, and look out for targets in the range of 650 to 670 at least.
All right, believe that's the conviction because Kunal has been tracking this particular stock from the last couple of days. Today morning, I guess that Naresh was also looking at this particular counter, recommended a buy, and now Kunal is giving a thumbs up to that as well. But Naresh, what is the stock on your list?
So continue to play defensive. That's a buy on Cipla. The stock has made a base around this 1400 mark. Today, the stock is broken out of a 2-week range, about 1480 levels. So risk reward trade here, stop loss at 1465, target price of 1500.
Let's take a very quick break. Still got half an hour to go before we wind up for trade, but we're absolutely flat. Let's see what direction the market takes, if at all.